But then once I went into crypto, I think the first dumb question I asked was, what textbook should I read in order to learn more about blockchain? And like everybody started laughing at me because they were like, there is no textbook to learn about blockchain. There is no course to learn about blockchain because the reality is that the industry is changing at an incredibly fast pace.
It is common for Web3 protocols to invest in startups that will eventually be a part of their ecosystem. My today's guest, Sachi Kamiya, joined Polygon at a time when its founder Sandeep Naiwal had announced a $100 million fund that will invest in startups that build on Polygon. In this episode, she talks about the initial values of this fund, how it has evolved over the years, how does she scout startups for this fund, and of course her motivation to be a part of the Web3 industry. Sachi is an extremely warm person and also a co-host for another podcast I produce that's called Web3 Unlocked. Right now you're listening to Web3 Quest. I'm your host Diksha and enjoy this conversation. I think I've never got a chance to actually ask you that how did you come to Polygon from like a Wall Street trader, and why did you come to Web3? And like we cover Web3 stories for everybody, but we've never got a chance to know your crypto story. So take us through that.
Yeah. So yeah, I guess I'll give you an overview of my background. So I studied electrical engineering at Caltech. Then it was like during my sophomore year when I realized I wanted to do more so like a finance / business development type of role. I did an internship at Mitsubishi and I realized, I didn't want to necessarily pursue engineering. So I got an internship in sales and trading over at Bank of America at Merrill. So I was doing that for a couple of years. I was doing credit trading, which is like a completely different world. Basically, I was looking at investment grade bank bonds. But I feel as though that gave me the foundation or the general structure for like understanding how DeFi works. Because I feel as though a lot of people that go into DeFi, they don't necessarily have the options trading or derivatives type background. But yeah, in terms of how I got into crypto or Polygon, it was about like 2.5 years ago or like 3 years ago when I met Sandeep and the company, which at that point was still Matic, was starting to reach an inflection point. So they just rebranded from Matic to Polygon. And they also had just listed on Coinbase. So their token price went from like 20 cents to like 40 cents or so. And I could tell that, the company was growing at a really rapid pace along with like the whole crypto industry as a whole. So, I think the timing was perfect at that point because I would say Polygon was still known as an Indian company at that point, and they were looking to expand globally because at that point, our main competitor or Polygon's main competitor was like Solana, which is based in San Francisco, and AVAX as well, which is based in New York. So I was one of the first few like international employees. At that point, I didn't know necessarily, like I just knew I wanted to join the company. So the first step was me joining the company, then figuring out where I would fit within the company. So at that point, Sandeep also announced that he would set aside 100 million to invest in the Polygon ecosystem. At that point, there wasn't like a process in terms of investing in deals. It was more so like business development would decide like, oh, this is a project that we want on Polygon. So we will invest like 100K or this is like a good founder. So we'll invest like 200K, but there wasn't like a proper due diligence process. There wasn't like an investment committee. There wasn't like a investment memo. So I decided to like kind of set up the general structure for that. So that's how Polygon Ventures started. I was like the first team member there. And since then, the team has grown rapidly. The number of deals that we've done has also accelerated at a really fast pace. So the team now is like 8 people. We have 2 people that focus on infra / DeFi. I focus on like consumer type applications. Then we have 2 people that focus on gaming. So yeah, it's been a interesting journey. It's great being part of the Polygon ecosystem because I feel as though it's been the center of like blockchain innovation, along with like all the other L1 or L2s like Arbitrum or like Solana or AVAX. So it's been an incredible opportunity.
Yeah. I mean, it's so cool you joined them like at the very beginning when they were setting up, and now you say there are 8 employees. So, how has the fund actually evolved, like with the industry in terms of its values, what it was investing in? Can you break it down in terms of how it grew in terms of focus and values?
When we first started, I would say it was when Axie Infinity and YGG like exploded in popularity. I think YGG had just announced that they were backed by A16Z. So you could tell that gaming was going to become really popular. And there was a concerted effort by Polygon itself to gain more like Web3 gaming companies to build on Polygon. So it was right around the time when Polygon Studios, which is the dedicated business development arm for gaming, was also launched. So as a result, the fund was also focused more so on gaming projects. So I would say like maybe 50 to 70% of our investments at that point were mostly gaming. Obviously, the market has evolved. At a certain point, metaverse was really popular. Now I would say infrastructure is a lot of the focus for a lot of VCs. And we've also been investing in a lot of infrastructure type projects. For example, a recent one is Eigenlayer. So as a fund, we've been super flexible. Like as long as these projects to some capacity add value to the Polygon ecosystem, we're open to investing because, you know, we're also not a big ticket size. It's not like we're leading the round or taking up the whole round. So we don't want to put that constraint onto projects. Yeah, like what's interesting is that like some of these projects, like we would invest like a small ticket and initially they would say they would build on Polygon, but then they would end up with a better offer from another blockchain, which sometimes happens. But then in the end, I've noticed that eventually all these projects end up coming back. Like they would be building on AVAX, but then they will realize like, oh, building on AVAX is actually really difficult, or they just don't have the support that they want. So then they end up coming back to Polygon. So yeah, in terms of how our investment thesis has evolved, we're generally just really flexible. We're looking at where the market is heading. I think right now we're focusing on infrastructure just because there's no clear market trends, but we are like ready to pivot if necessary.
What kind of infrastructure can you elaborate on that?
So yeah, one type of infrastructure is like gaming infrastructure. So, for example, being able to mint NFTs to at a mass scale, or being able to monetize your users in your game. So that's like gaming infrastructure. Then I would say there's also like general infrastructure or like building on top of like Ethereum. So Eigenlayer is one example. There's also like ZK infrastructure. So now that ZK VM or just ZK tech in general is becoming really popular, I've seen a lot of projects come up with like ZK rollup as a service, for example. Yeah. So infrastructure is like, it's pretty broad for the most part.
I mean, nice you brought up ZK. So what makes Polygon so bullish on ZK?
Yeah, I mean, so Polygon actually saw ZK as basically the key to scaling Ethereum more than 2, 3 years ago. Like I remember these conversations with Hermes and Maiden. They're basically the ZK acquisitions that Polygon did. Like those conversations were already happening 3 years ago. So they saw the future like very early on. The reason they think that ZK is the future in terms of scaling is because, you know, the alternative is optimistic rollups. But the reality with optimistic rollups is that it takes time to settle. There's like a 7-day challenge period. And you can't necessarily take out like a large amount of capital. Like if you want to move from an L2 to an L1. Whereas with DK, you can, because you basically just have to submit approved. Yeah. The reason why Polygon is bullish ZK tech in general is that you're actually able to like scale on top of Ethereum, whereas like with other options, you can't.
You also mentioned in your previous answer that, we give a lot of support to startups, even though the ticket size is small. So can you explain, like, in terms of what's your involvement once you invest in a startup? Like, what is the ticket size? And then when you say support, what are the things that you mean by that?
In terms of ticket size, it ranges between 100K up to 500K. Average ticket size is about 250K. And in terms of support, if a project is, looking to raise capital, we can definitely help with fundraising. We have a very strong network of top VCs within the space because Polygon itself had also raised 500 million from like SoftBank, Sequoia, Lightspeed, etc. So we have direct contact with all the GPs at these big funds. So we can help with fundraising. Obviously, a project will also have direct contact with the business development team because, I think Polygon has reached a level where the ecosystem is really big. And sometimes it can be very difficult to get the mind share of each individual like business development person. But if Polygon Ventures has invested, then you guys will obviously have a line of contact with the business development team. Then you can also get marketing support, so you can amplify whatever partnerships or announcements that you want to make related to Polygon, like leveraging Polygon social media handles. And lastly, you can also get tech support. So if you need help deciding like which product you want to build on, whether it's like Polygon POS or Polygon zkAPM or Polygon Supernets, then we can kind of give you an overview of what are the pros and cons of each product. And if necessary, we can also provide support in terms of onboarding. So yeah, ticket size average is 250K. In terms of support, it's generally business development support, marketing support, tech support, and also fundraising support. And the last thing I wanted to add is that you also get access to like a very strong network within the Polygon ecosystem. So we just started like a Telegram group chat where we add all the top founders or from our portfolio companies. And there we share some like insight about the Polygon ecosystem. It's a great way for all these founders to kind of network together because I feel as though there's so much overlap between like an NFT marketplace and like a gaming project or like a gaming infra project. So that's also a great way in which we can add value to our portfolio
Mhm.
companies.
And at what stage does the startup need to be even considered, like, in terms of adoption or idea?
Yeah, I would say like you should have a pretty solid understanding of what your product looks like. You should also have a pretty solid idea of what your team looks like. Like people should be full time. The more metrics you have, the better. I think because of where the market like the market has changed a lot versus compared to a year ago. Like I think a year ago some people were able to raise based on just an idea, but nowadays I feel like VCs in general are looking for a product market fit, which means that they should already have metrics in terms of monthly active users, daily active users, like retention rate, like TVL. So those are like the general metrics that we will look at whenever we're assessing a project.
And when you talk to founders, what are the green flags that you usually see, and what are the red flags that you usually see?
I would say green flags is having the right background. So if you used to work at a blockchain company or you have the relevant experience within the TradFi space, just like the right background and experience, I consider that like a green flag. Also, just being generally open minded and being willing to pivot. I think having a community mindset is really important. And that's what, Sandeep and many other like Web3 founders have said that, you as a Web3 founder, you have to have a community mindset. So I think that's also really important. The ability to be able to grow a community, like foster that community, and also leverage that community in order to get like a bigger audience for your product. And then what else is important? Yes, I would say like those three things are the most important. So the first thing is having the right background and relevant experience to like build the product. Number two is the ability, like be community minded and have the ability to grow a community. And number three is just like flexibility. So being able to take feedback and being able to pivot accordingly. So yeah.
Red. Red flags as well.
Oh, and red flags. Red flags. Yeah, red flag would be like someone that's too hard headed, like just basically the opposite of being flexible. So somebody that's not able to take feedback, I consider that a red flag. Um, Number two is just not having the relevant experience. So I feel as though there's some companies where they might be really strong on sales or business development, but they might not necessarily be strong on tech. Or there's also the other extreme where the team is incredibly strong on tech, but they don't have any business development or sales acumen. So I think it's really important to have a balance within a company, because if you don't have one or the other, like it's just not going to work. You need a balance.
I think this thing that you said, that they need to be in sync with the community, is one of the factors. How do you really judge that? I mean, how do I judge if a founder is, or judge is the wrong word, but how do I know that the founder is in sync with the community? I mean, as an investor, I really cannot figure that out on my own, right?
I mean, I think you can tell with in different ways. Like I think when I was speaking to a founder, specifically it was a company called Favor, which Polygon actually ended up investing in. Favor is a decentralized social media protocol that's built on top of Lens protocol. When I spoke to Tommy, like I got the sense that he really understood how to build a community. Like he leveraged all these different resources in order to build a community in Japan and Turkey and Asia in general. And I think that stood out to me. And also, he mentioned how there were individuals from the community that were super proactive and were willing to add value to the ecosystem itself, which is ideally what you want in the end, right? So I think when you speak to a founder, you can tell if they're more community minded. Somebody that's not community minded is somebody that wants to keep control of everything. They're not willing to like give up responsibilities to other people. So I think it's something that you can pick up when you speak to a
Yeah,
founder.
yeah, I think that's fair, and you've done it for so long, so definitely you can figure it out. So we had a
Yeah.
guest on this podcast, Pareen. He has like a incubator for Web3 startups, and he actually made a very interesting comment. He said that Y Combinator kind of thing can never work for Web3. And he had an
Mhm.
explanation around it. He said that it goes with like cohort, content, demo, and Web3 founders need much more than that, because it's not established right now that how they can grow. So I want to understand from you, since you're on the investing side and you're also a contributor and you're also angel invest, how do you define um, a quality accelerator in the Web3 space? Like, what all should it offer to Web3 founders? And do you also agree that the Y Combinator kind of thing cannot work for Web3 founders?
I disagree. Like I think people need better frameworks to become a better Web3 founder, because honestly, there's just no resources. Like there's no book on how to become an ideal Web3 founder, but there's a lot of resources on how to become a startup. Like there's so many resources like produced by Y Combinator, Polygram himself. So I think I don't think the Web3 Y Combinator equivalent exists yet, but I think we definitely should have one. And we probably will in the next 5 to 10 years, because the Web3 mentality is just not it's not the same as a Web2 founder. The most important thing that a founder should assess when they're talking to an accelerator is what are the commercial terms? So like what percentage of tokens are they asking for? Like what valuation are they going to invest in order to provide support? And I think this is really important because there are some accelerators out there that I feel as though the financial terms are just not good at all relative to the value that they provide, in a sense, or sometimes even predatory, because like they take 10, 20% of tokens. That's just not like attractive when other investors come in, because basically one entity has control of the entire token supply, which is like opposite of what Web3 stands for, right? It should be decentralized. So number one is, pay attention to the commercial terms and make sure that it's actually worth it relative to the value that they provide. Number two is the quality of mentors that are on board the accelerator. I would look at the website, see who the mentors are and if they're actually engaged. I think that's really important. And number three is like, do your due diligence, like go around and ask people, like, what was your experience going through this accelerator? Were you actually able to get help? Were you actually able to get funding? Because, an accelerator I feel like it's a commitment, especially if they're investing in you and, are taking a portion of your tokens. An example of accelerators that have done well, Alliance DAO was one of the earlier ones. I think they've done really well in terms of recruiting the right mentors / people. I know that in some cases, they don't even ask for an allocation in tokens. They just want you to be part of their cohort because you're a really good project and it looks good for them. So that's like one example of a good accelerator that I know of. And then there's Beacon or Symbolic Capital, which I know I'm biased, but I think it's also done a really good job in terms of getting excellent mentors, people like the head of listing from Coinbase or CMO at Chainlink. Like all these people are very high quality, like Web3 founders or like builders or operators within the space. So I think these two in particular are one of my favorite like
Yeah,
accelerators in
yeah.
the space.
I think that's a very good point because there's no handbook right now, right? So all you can learn is from experiences, and mentors are actually the
Yeah.
people who can give you these experiences. What are your views on bootstrapping a Web3 startup? And what kind of models can be easily bootstrapped? Because, of course, there are some models that cannot be bootstrapped. So just want to know
Mhm.
your views on this.
It depends on the type of project. Like there's just so many different types of Web3 protocols. Like the way you would bootstrap a DeFi protocol is very different versus how you would bootstrap like a consumer type application. But I think what's common between all these protocols is that typically they have a token. Like you should consider the token as kind of partially like a marketing strategy as well. Like if you're able to design the token appropriately and create the right incentive mechanisms, then that could be an incredibly powerful tool for bootstrapping the ecosystem and rewarding the initial users within the platform. So I think people should really take a lot of time in terms of tokenomics, like properly designing the token and figuring out what's the correct incentive mechanism. Because if you have the right proper incentive mechanism, then that could really, you know, accelerate the growth of the ecosystem and even make it grow exponentially. But if you don't properly incentivize people, then they could end up abusing it and basically just take value of the entire ecosystem. So you really need a good balance.
Mhm.
And you can see that with like play to earn as well. Like I feel as though at the hype cycle, basically everyone was like extracting value from all these games. Like I don't think the token was properly designed. And then as a result, once a bear market came, everybody just left and there's just no value left within the ecosystem. So people should really think about how to properly incentivize their users and create a proper like token design.
Oh, yeah, that's a good point. I think you mentioned that Polygon was sort of very heavy on gaming in the beginning, and now
Mhm.
also they are sort of pivoting what kind of models excite them. So, if I ask you today, like, what are actually the kind of startups or areas? You said you are dealing with infra, consumer, and
Yeah. Yeah. So as a team as a whole, we've been looking at, I would say focusing on like consumer and also, and especially like infrastructure type projects. There hasn't been as many interesting DeFi protocols. Gaming has also in general slowed down. So
Yeah.
our focus has been like infra.
And you tweeted that there are not many projects, consumer apps out there in Web3. Why
Yeah.
do you think is that happening? What's the reason? Or do they die,
Um,
or are they not able to figure out what the model is? Yeah, why don't we have it?
I think it's a combination of there's also just not that much funding for consumer applications right now. Like VCs, if you nine out of, or I would say like 4 out of 6 VC, like 2 out of 3 VCs would say like we're primarily focusing on infrastructure and they're not really investing in other type of protocols. So I think that's the reason why maybe right now there's more infra versus, consumer applications, just because that's how you're able to raise money. But I mean, who knows? Like a lot of these projects, they also quickly pivot. Like I've seen so many projects that raised um, based on blockchain technology, and then they've like pivoted into AI. So especially the early ones are like willing to pivot if needed.
Yeah, that's a good question again. Like AI. So everybody is also talking about this Web3 AI, and like not even projects, but also I feel like investors are just now
Mhm.
adding AI to that. Like Web3 native funds are now like, okay, also AI. So yeah, what do you think about that in terms of, do you think even Polygon is going to add AI as a factor in some of its investing?
So I haven't seen, I mean, there are a couple of really interesting AI projects. A lot of these also look like scams. So I think, or just riding the hype cycle. I think one interesting practical use case that Solana actually just announced is how they're integrating with
Yeah.
ChatGPT so that they can analyze all the on-chain data or just like consolidate all the information about Solana so that let's say like a developer wants to build on Solana, it's really easy for them to kind of just, ask this Solana chat GPT, like how do I build this or how do I build that or how do I deploy a smart contract? And it easily is able to give you back an answer. So I think that's like a practical use case that I feel as though will probably be successful. Then I've also seen other interesting ideas such as creating like like a market for training data. And it would be decentralized. Basically, if you add value, like let's say you add additional data points or additional training data, then you would be rewarded for that. Or if you use that training data, then you have to pay for the amount that you're using, which I think is also a really interesting use case, but I haven't seen it actually implemented yet. So I think the reality is that the crossover between AI and blockchain, like it's definitely there, but it's going to take time for it to actually come to fruition. It'll probably come in the next 3, 5 years or so. I know I have a couple of friends who like left their old job or their old VC company in order to like start a new blockchain AI project. So it's honestly like exciting times. I think we'll see the actual results of that in like the next 3 years or so.
Yeah, nice. So when you were getting into Web3, did you know it's like so crazy? Or were you like seeing it from the sidelines? And if you didn't know, like what are the changes you had to bring in your mindset and working
Mhm.
culture to actually adapt to the industry?
Yeah, I think the first thing was that I feel as though like growing up and like going through college and even like going through my old finance job, like most things you could learn by reading a textbook. Like, throughout college, like physics, or even quantum mechanics, like everything is written in a textbook. So I could just like read a textbook and then learn about the subject. And that's typically how we become an expert in the subject. And I think same with traditional finance too. Like the way you trade bonds or how you value a bond hasn't changed in the past 20, 30 years or so. So I was used to that type of learning. But then once I went into crypto, I think the first dumb question I asked was like, what textbook should I read in order to learn more about blockchain? And like everybody started laughing at me because they were like, there is no textbook to learn about blockchain. there is no course to learn about blockchain because the reality is that the industry is changing at an incredibly fast pace. Like, if you think about 2, 3 years ago, the concept of blockchain gaming didn't really exist. Like YGG or Xe Infinity did not exist. And the only way to learn about that is to literally go into the application and actually play it, or go onto Twitter and then like read things that other like Twitter influencers or people on Twitter have uh, posted about. So I think that was the biggest shock for me, that the industry is changing at such a fast pace that you have to be willing to like go out of your way to actually use the applications and learn about the applications, and also delve deep within the crypto Twitter's play spaces, or like delve deep within crypto Twitter, because that's the only way in which you're going to learn more about what's happening within crypto today. You can't learn any of this from a textbook. The second thing is, I feel as though like the culture within crypto is like very different compared to like the traditional finance culture. Like I feel as though being a degenerate in finance is definitely, I don't think it's really that acceptable, to be honest. Like you have to be like, there are guidelines in terms of how much risk you're willing to take.
Mm.
And if you like go above those risk measures or levels, you could potentially even get fired. So like I feel like there was a stark contrast between being a degen on it within crypto, where you're taking like 20x, 30x leverage, which is like a crazy amount of risk, versus in finance, where you have to be incredibly careful because there's already all these frameworks set up. And you can't go above a certain risk limit, just because it's like a liability for the company. But that's a complete opposite in crypto. I feel as though crypto kind of embraces that. But I think part of it is also because the industry is growing at such a fast pace. Like there's a lot more potential upside, versus with traditional finance. There's just not that, like everything is already set. I feel as though the pie is not going to grow any bigger. Whereas with crypto, it's going to grow even bigger.
And also, like, I think crypto is 24/7, right? Isn't that like too
Right.
stressful? Or or do you feel you were made for this? Because I think I also spoke to somebody who was like a CFO in a protocol, and he was like, "Oh my God, this was like the most stressful job ever." And
Yeah.
it's like completely burnt out because it's such a sensitive area also of a company that you're dealing with. So how are you coping with that fact that the teams are remote and they can like text you anytime you wake up to like 200 telegram messages?
Right.
Yeah.
Yeah. Um, yeah, I mean, I think it was tough, especially when I first joined, because I was basically like the only person on the team. So everything would go through me, and that was like very stressful, just because I felt as though I couldn't manage my time, or I couldn't finish all the tasks that I was required to finish. So at that point, I basically just had to prioritize. So that was very stressful. But I think over time, as the team grew, I was able to delegate a lot of these tasks. Now we have different verticals that we cover. So it's gotten a lot less stressful than before. I think also the bear market has slowed a lot of things down. So I was definitely very stressed out, like 20 beginning of 2022, when we were like closing out the Polygon round, because that was something that, was high on the agenda in terms of priority and importance for the company. And I think the number one rule when it comes to fundraising is that like once you have a commitment, you have to close immediately, which means, and even if a fund like commits a certain amount of capital, like you still have to go through the legal process. Like you have to draft the documents, you have to sign the documents, and then you have to like chase them to actually send the capital or get the money into the bank. So that was incredibly stressful for me because I felt as though I had to work 24/7 just to like keep an eye out on my emails and just like closing out all these capital commitments. But now I feel as though like I found like a better balance and not juggling like fundraising with like like doing due diligence on projects or just like sourcing projects. So it's a lot better. And like I mentioned, it's a bear market. So it's nice because we can actually take time in terms of evaluating these deals. We don't feel the pressure of like having to commit a ticket because there are 10 different VCs that are trying to commit and the round is completely oversubscribed. Like we can actually take time now.
Ah,
So it's nice.
okay, that's nice. So, what's your advice to somebody who's um, going to start a similar job as yours, like start an investment fund at a protocol and needs to set up processes? If you had to like transfer your learnings to this person, what would you say?
I would say the first thing is like prioritize hiring. Like I don't think I prioritize hiring enough. I ended up putting a lot of this work on myself, but I think if I were to go back in time, I would have spent like way more time on hiring people so that I can like actually delegate my work. So that would be number one. Number two is setting up a general framework so that people can follow, like, setting up a process in terms of having an investment committee, also having like a database in order to keep track of all the deals. Um, so I guess like setting the time like 1 or 2 hours per day to set up a general framework so that other people can follow. I think the problem with me when I first joined Polygon was that I felt as though I was so overwhelmed with work that I didn't even have time to think. But I think giving yourself time to think and actually plan accordingly is really important. I think, especially when you're like senior within a team, your ability to like think and strategize accordingly is really important. So I think making that time for yourself is really important. And then number three is also be super friendly with everyone. I think what Polygon benefits from is the fact that we have an incredibly strong network, both within the Web3 like VC space, but also like on a protocol level. So then as a result, we end up getting like excellent deal flow, both from founders and also from VCs themselves. So I think it's really important to be open-minded and kind um, in general, because I think, what comes around goes around. Like if you help somebody out, then they will also help you out. And I think it's really important to keep that in the back of your mind.
Thank you. That was really valuable. So I think we can just transfer these to anybody who's starting up. And
Yeah.
now I think we covered most of the stuff, and this was very helpful. So now we have like a rapid fire that we sort of,
Okay.
I know you know these well, right? So I just
Mhm.
spontaneously made up actually these questions because you know all of them, so I don't know what to ask you. Okay.
Yeah, sometimes they catch me by surprise,
Yeah.
so hopefully I'm able to answer.
So, what is the word that comes to your mind when you hear meme coins?
Uh, Pepe.
Um, what is your biggest FOMO moment in crypto?
Uh, Biggest formal moment was probably 2020, start of 2022 when we were raising like 500 million for Polygon.
Yeah, I thought you were going to say Pepe again. That's my
Yeah.
FOMO. Sure.
I mean, I FOMO too. I should have bought, but I missed out.
Yeah. If you had the opportunity to have dinner with a like OG in crypto, who would it be and what would you ask them?
I'd love to sit down with Vitalik and get his views on what he thinks is an ideal Web3 founder.
Okay.
Um, yeah, because he's like the OG, right? Like he's basically the original Web3 founder. So I'd love to get his thoughts. Either that or CZ.
Okay. Yeah, hopefully we get one of them for Web3 Unlocked. Let's see. Okay, so what's NYC or Dubai? Yeah, this I've wanted to ask you. You tweet a lot about Dubai.
I evangelize Dubai because I want more people to come to Dubai, and the quality has gotten way better, like compared to 2 years ago. And I think part of that is also Sandeep telling people to come to Dubai. He's been actively pushing for his exec team to move to Dubai, which I think is a great thing. There's honestly a lot of great crypto people here. CZ is here. All the Polygon co-founders are here. And honestly, I think Dubai will continue to become a crypto hub. But in terms of which one's my favorite city, I think it's New York, honestly. Like, New York is the best place in the world. The people are super high quality. You can find crypto people, but you can also find all different types of people. So I really love that melting pot. Yeah.
Yeah, if you can afford New York, yes, why not?
Yeah.
I think the only problem is it's like super expensive to live in New York at this point. Um,
Yeah.
what's the best life advice that you received and you would like to pass on? It doesn't need to be professional. The professional, it can just be like anything.
That's a good question. I think the best life advice or something that has resonated with me is like making the time to think and strategize. And this is basically what it's either Warren Buffett or Charlie Munger has said, that you should really give yourself the time to think and strategize, because that's basically what you're being paid for. That's what gives you the additional alpha. And I think with life itself, it can get super busy, right? Like, you have so many different tasks that you have to take care of. Your colleagues might be asking you for something, and it can be really difficult to actually like sit down and think and organize your thoughts. Um, but I've been like trying to actively just take like 1 or 2 hours to think about things, instead of just like going with the flow and like following all the tasks I have to complete.
Yeah. No, I think it's very important because, especially in crypto, we are just like doing stuff that comes our way, without thinking too much. And I think
Yeah.
this is like a legit problem with most of the projects, even that I consult with, that we never, like, I almost feel like strategy is a bad word sometimes to say in a meeting. Like, it's like,
Yeah.
do it, just like, why are you thinking so much? Do you play Web3 games?
Uh, Not really. I haven't. I wish I should, honestly, but I haven't. I guess the closest thing to a Web3 game I've played is like Steppen.
Okay. No, I don't know. I haven't played that. And the last is like, how many NFTs do you own? Do you own NFTs?
Mm. I own a few, probably like 10 or 15 or so,
Okay.
but they've all crashed because of the market, but it's okay.
Yeah, I know. I mean, but everything is crashed, right? So I hope
Yeah.
we'll get out of it like in a year or two. I don't know. So,
Yeah.
okay,
I'm
Sachi.
optimistic.
Yeah, this was so much fun. I think we covered like so much, and definitely like founders and people in investing are going to find it valuable. Thank you for your time, and I'll see you in the other podcast very soon.
Awesome.
Yeah.
Yeah. Thank you, Diksha.